This SMT here that I wanted to see. Now, what are we watching? This breaker here. So I'm gonna go long right there on the breaker. Boom. Let me change the color on it. I'll change it to purple since it's Halloween. 4178, 4191. All right, so I'm gonna go for 4190, 4188. So that'll give me 10 handles here. Automatically sell stop's gonna get raised. Notice I'm not aggressively raising it just because we've been rising up. That's stupid. Oh, damn it. Of course I switched over as soon as it executed my trade. All right, so that's 10 handles right there. I am expecting higher pricing, but I don't care if it runs off without me, honestly. I'm content with the 10 handles. The only reason why I'm stopping at 10 handles and not holding for the highs is, one, day before FOMC. Two, we were trading into this inefficiency here, and it could have found some type of respect and then just consolidated or traded lower. Obviously, with the higher time frame narrative, I was expecting us to continue higher. So, matter of fact, actually, extend these levels out here. What's going on, guys? GK the Trader here. Sitting down to do a review here on today's price action. It is October 31st, 2023, Halloween. Starting here on the daily time frame. If you look here, we made a daily swing low. We shifted above this down close candle, and today we opened, traded lower, trading into the opening of this order block here, which is this down close candle. We can reasonably expect at least a small amount of a retracement because, number one, we've been very heavy to the downside. Number two, we cleared out this key monthly low right here. So if you take this line here, you can see how we cleared that out. See that? You can always expect some type of reaction after taking out monthly lows, weekly lows, daily lows. If you look here on the chart, my main focus here for today was obviously this volume imbalance right here. This is a high volume imbalances are typically, especially on the daily time frame, higher probability draws on liquidity because it's the most inefficient type of price action we can have, and price is going to want to draw to that and deliver some volume into this area. If we take our fib here, yesterday's weekly high to the low that we made, this volume imbalance just so happens to be right at equilibrium, and before we're continuing lower, we want to see what a premium priced in. So premium would be up in this blue shaded area relative to last week's high here and the low we made. So with that, let's go down to the hourly time frame. If we look here, we opened here on Sunday. Value resides, and what did we do? We opened at this new week opening gap, and we moved away from it. NASDAQ was able to get down there. We weren't on ES. That's an SMT divergence. So let me show you that quick. Right there. See how NASDAQ was able to get down there? Weren't able to on ES. So we create this intermittent term low on Monday. We keep it intact. So this swing low here, swing low to the left of it, swing low to the right. Coming in on Tuesday, you can see midnight. We trade higher, shifting above this high right here. That's key, because this aggressive run up in London session lets me know that the algorithm wants to reprice to this volume imbalance up here and above the buy side right here, above previous 3 days high. Going into the New York session, let me go ahead and extend out the opening price here. And what did we do right to the tick? We returned right back down to that midnight opening to accumulate more longs to the upside. Take our fib. What is this? London low to the high that was made, and where did we retrace? Down into that sweet spot optimal trade entry level. So sweet spot is what I talk about in my private group a lot. So between this 62% retracement level and this 79% retracement level, the midpoint of that would be our sweet spot. So a sweet spot for a retracement where we likely are going to see a significant reversal after we have this failure swing here. Flipping over to NQ, what do we have again? SMT divergence. Trade below that midnight opening right here, extend that out. Let me get rid of this. Midnight opening here, extend it out. We traded below that to do what? Take out the sell side here, take out the bodies here. So this is a rejection block from yesterday, extend that out. And then we're also returning to the new week opening gap. So once we came down, took out this low here, and failed to do so here on ES. That's a high probability SMT divergence. And with that, let me go ahead and mark out the discount array that we priced into at the opening. So not only did we trade below the opening to take out sell stops, but we also traded down to this inefficiency here. See that? And I'm actually going to mark out this inefficiency here because for the, alright, boom, 15-minute time frame. You see clearly, see this low here, low here. This is what we call internal sell side liquidity. So we swept that. There's going to be sell stops below both of these swing lows within this price leg from London. So those that have been buying, if they didn't take their profits, they're getting taken out here. So what did I say? Optimal trade entry. We returned to the midnight opening and this inefficiency and took out internal sell side. And we had an SMT. So once I saw that, I was like, okay, like, I'm going to be looking for longs here. One more thing. If you take a look at this box here, this is what I was using in my live stream. And I don't believe I mentioned it, but I was using it. So this right here is from yesterday's New York session. This is a balanced price range. So we traded down, completely overlapped above it, offering what? Sell side of the curve, buy side, and then we repriced to it again to the low of it and then left it. So once we come back down right here and here, we should not disrespect this area right here. So balanced price range. Five-minute time frame. Fix my levels here. 5-minute time frame, you can see right here, what do? We create this 5-minute order block. Why is this an order block? Because we returned to the midnight opening price, we took internal sell side, and we traded to a discount array, and then what? We create this down close candle, completely shift above that. As soon as we shift above the opening, boom, that lets me know that's a change in the state delivery, and we're going to be entering a buy program. Down to the 1 minute. Take a look at the 9:30 opening. What is this? What is this? This is a Judah swing to the downside. All of this movement lower at 9:30, that is a Judah swing to lull traders into getting short. Once we got down to that discount array, the Judah swing is over. Boom. What was the purpose of this Judah swing? To return to the midnight opening price, return to this discount right here, this purple shaded area, and take out the internal stops. So let's take that off. If you take a look at these lows right here, we trade here, and then we come back down, sweep this low right here, this 950 low, and then look at NASDAQ. We create a failure swing there. So boom, what do we have? SMT at what? The optimal time of day. And what does optimal time of day yield? Optimal trade entry. What is this? An optimal trade entry. We're tracing to that 62% retracement level. So that's an optimal trade entry on the NASDAQ. ES. We trade lower, sweeping this low here. As soon as we shift above that 5-minute order block, refer back to the earlier of the video. I was talking about the 5-minute order block. As soon as we shift above that, we have this breaker right here. Make sure I got it accurate here. So we had this breaker right here. As soon as we wicked down into that, obviously you saw I went long. Let me show you once more. As soon as we wicked down into that, boom, I'm going long. While I'm doing that, I'm keeping in mind, let me take this off quick. I'm keeping in mind that I'm opening myself up to drawdown, so I knew it was likely that we would retrace down into this gap here, but ultimately we didn't, and I had 0 drawdown on the trade. But the important part is you have your stop below here allowing for that to happen. So you have to have your stop loss down there, down below this inefficiency. So boom, go long, and I was targeting this 930 opening here. What do we do once we trade to the 930 opening up here? We engineer these clean highs right up here, and then we trade down into what? Another optimal trade entry. Take our fib, high to low. What makes this optimal? Time of day, 10:30. Trade down into that sweet spot, retesting the breaker, and trading down into this the lowest inefficiency down here. And then look at the 5-minute. Retracing down into this gap and the 5-minute order block, accumulating more longs below the 930 opening, right? Last piece of the puzzle here. When did I take my trade? When? So boom. Right here we have that 950 to 1010 macro. That's exactly when I went long within that macro. What do we know about macros? This is whenever we would like to reprice to what? Either a premium array or buy stop. So we're targeting the short-term high right here, and then the premium array in the form of the 930 opening and the rejection block up here. Extend that out. The body's up here. That would be the rejection block. So this is everything I used for my trade today. This was the highest probability intraday trade that you could have taken today. And I'll see you guys tomorrow on the live stream, and I hope you found this insightful.